Trump's Mexico trade talks, 90-day negotiation deadline explained. The Trump administration's latest move has sparked a global debate over trade policies, with a 90-day negotiation period with Mexico set to reshape international commerce. As the clock ticks toward a critical deadline, tensions rise over how tariffs will impact economies worldwide. But here's where it gets controversial. Trump's plan to impose 25% tariffs on Mexican goods, while promising dialogue, has raised questions about fairness and long-term stability. The U.S. leader's decision to extend negotiations with Mexico comes after months of uncertainty. Key details about tariffs remained unclear, leaving countries like Switzerland and Norway in the dark about their trade status. Norwegian Finance Minister Jens Stoltenberg called the situation completely uncertain, highlighting the risks of sudden policy shifts. Trump's outreach extended beyond Mexico, with agreements reached with South Korea, the EU, Japan, and others. However, not all nations are in the clear. The EU, for instance, is still finalizing rules for taxing imported auto parts, a process that could take weeks. The ball is in their court, said EU officials, noting the U.S. commitment to enforce its own terms. At the heart of this dispute is a $171.5 billion trade deficit with Mexico, a gap that has widened since the 2020 USMCA agreement. While Trump claims the deal will address fentanyl trafficking, critics argue it's more about economic control than genuine collaboration. How do we balance national interests with global stability? The question lingers. And this is the part most people miss. Trump's 90-day window isn't just about tariffs. It's a test of diplomacy, a chance to rebuild trust, or a warning of what happens when negotiations fail. Do you think this approach is the right way forward? Share your thoughts in the comments. Oil prices drop as Trump's tariff deadline looms. Oil prices are on a roller coaster, and right now, they're heading down. But is it just a temporary dip, or the start of something bigger? The answer might surprise you, especially as President Donald Trump's August 1st trade tariff deadline casts a long shadow over global markets. If you think this is just another routine market fluctuation, think again. Here's where things get complicated and controversial. As the clock ticks toward Trump's much-publicized tariff deadline, investors are growing increasingly anxious. The uncertainty is palpable, especially for countries that haven't yet secured a trade agreement with the United States. On Thursday, Brent crude futures for September closed 71 cents lower at $72.53 per barrel, while U.S. West Texas Intermediate WTI crude for September dropped 74 cents to settle at $69.26. Earlier in the day, U.S. crude futures had fallen by more than $1. This comes just a day after both benchmarks posted 1% gains, highlighting the market's volatility. But here's the part most people miss. The White House has made it clear that any country without a finalized trade deal, or those who haven't received a formal tariff notice, will be contacted by the U.S. before the day is out. So far, the U.S. has managed to strike agreements with 2/3 of its top 18 trading partners, but that still leaves several major economies in limbo. In a move that's sure to spark debate, President Trump announced that he and Mexican President Claudia Sheinbaum have agreed to extend their current trade deal for another 90 days. During this period, both sides will continue negotiations in hopes of reaching a new agreement. Trump also stated that Mexico will maintain a 25% tariff on fentanyl, a 25% tariff on cars, and a hefty 50% tariff on steel, aluminum, and copper. Additionally, Mexico has agreed to immediately eliminate its non-tariff trade barriers, a point Trump emphasized in a social media post. This extension, however, has left oil traders uneasy. John Kilduff, a partner at Again Capital in New York, explained, "Overall, these tariffs are a negative signal for future oil demand, and the situation with Mexico just delays the inevitable. And this is where the controversy heats up. U.S. inflation rose in June, partly because tariffs have driven up the cost of imported goods like furniture and recreational products. This trend supports the view that inflationary pressures will intensify in the second half of the year. potentially forcing the Federal Reserve to postpone any interest rate cuts until at least October. Lower interest rates typically encourage borrowing and economic growth, which in turn boosts oil demand. But with rates likely to stay higher for longer, could oil demand take a hit? Meanwhile, U.S. oil production continues to break records. According to the U.S. Energy Information Administration, EIA, crude output reached an all-time high of 13.49 million barrels per day in May, up 24,000 barrels per day from April. Yet, in a twist that caught analysts off guard, U.S. crude inventories surged by 7.7 million barrels to 426.7 million barrels in the week ending July 25th, mainly due to lower exports. Analysts had actually predicted a drawdown of 1.3 million barrels. On the flip side, gasoline stocks fell by 2.7 million barrels to 228.4 million barrels, far more than the expected 600,000-barrel drop, reflecting robust demand during the peak driving season. Toshitaka Tazawa, an analyst at Fujitomi Securities, summed it up. The surprise build in crude stocks was offset by a much larger than expected draw in gasoline, which points to strong driving demand. The net effect on the oil market is pretty neutral. But here's where. Trump's Mexico tariff deal. 90-day extension, global trade chaos explained. The world of international trade is on high alert as President Donald Trump prepares to extend the tariff deal with Mexico by 90 days. This decision comes as the deadline looms for agreements with other major trading partners like Canada and India. Trump is set to address the nation from the White House, where he will sign an executive order reinstating a fitness test for school children. A move that seems somewhat unrelated to the tariff negotiations, but underscores his commitment to various policy changes. Reporters are eagerly awaiting his comments on the tariffs, especially concerning the fate of countries without a trade deal in place. In a surprising turn of events, Ontario Premier Doug Ford has advised Prime Minister Justin Trudeau to stand firm against Trump's demands. Ford believes that the Canadian government should not compromise on the issue of recognizing a Palestinian state, which Trump has cited as a potential obstacle to a trade agreement. We need to hit that guy back as hard as we possibly can, Ford emphasized, urging the Prime Minister to take a strong stance. This advice reflects the growing tension between the two nations over trade policies. The impact of these tariffs is being felt across the United States, particularly among small businesses and consumers. Anri Seki, executive vice president of Waza, a Los Angeles shop selling Japanese products, expressed frustration. Despite raising prices by 10% to 20% to cover increased costs, Seki remains disappointed. It just feels unfair, she said. The uncertainty surrounding the tariffs is prompting some businesses to explore international markets as alternatives to the U.S. The coffee industry is another sector grappling with the implications of these tariffs. Brazil, the world's largest exporter of coffee, faces a 50% tariff from the U.S. This could lead to higher prices for American consumers or reduced profits for Brazilian producers. Secafe, Brazil's Coffee Exporters Council, warns that both countries will suffer significant impacts, with price hikes expected on both sides of the Atlantic. Utah businessman Jared Hendricks, who owns Village Lighting Company, has described the situation as a nightmare. His company, which sells Christmas lights and decor primarily from Southeast Asia, is facing delays in receiving shipments due to competition for limited supplier capacity. Hendricks has taken out a substantial loan to manage the unexpected costs associated with the tariffs. Even large corporations, like Ford Motor Company, are not immune, expecting to incur $2 billion in tariff expenses this year, despite manufacturing most of its vehicles domestically. Democratic lawmakers are sounding the alarm, warning that these tariffs could harm working families. Congressman Ruben Gallego highlighted everyday essentials like toothpaste, toilet paper, and dish soap, which could become more expensive. Senate Majority Leader Chuck Schumer criticized his Republican colleagues for not supporting legislation to block the tariffs, arguing that they would be detrimental to American citizens. Democratic Senator Tammy Baldwin echoed these concerns, stating that the tariffs leave farmers, manufacturers, and workers in a precarious position. The ongoing tariff negotiations have sparked debate about their effectiveness and impact. Critics argue that while tariffs generate revenue for the U.S. government, over $150 billion since Trump took office, they also lead to increased costs for consumers and businesses. Supporters contend that tariffs protect domestic industries and create jobs. As the deadline approaches, the full extent of these consequences remains to be seen. Financial markets seem relatively stable, with the top U.S. indexes remaining steady. However, commodity prices have shown some volatility, with copper prices dropping by 5%, crude oil falling by 1%, and natural gas increasing by 2%. The U.S. dollar has appreciated by 1.5%, reflecting the global uncertainty surrounding the tariff situation. The European Union has emerged as a crucial player in these negotiations, securing a deal that promises billions of dollars in investment for the U.S. However, questions remain about the specifics of the agreement, particularly regarding the treatment of alcohol imports. The EU deal highlights the complex interplay between different countries and the broader implications of Trump's trade policies. As the White House prepares to finalize its executive order, the coming weeks will reveal whether Trump's approach to tariffs will yield the desired results or exacerbate existing tensions in international trade relationships. The outcome of these negotiations could shape the future of global commerce and have far-reaching effects on economies around the world.